Hello everyone, my name is Shikha Malhotra and I am from Department of Commerce. Today we will be discussing about types of bank accounts. So before going ahead, let us quickly understand what bank accounts are. So bank accounts are basically financial accounts which are maintained by banks on individual customer basis. So there are different types of bank accounts available which the customers can get themselves open in the bank. So here we will be talking about savings account, current account, recurring deposit account, fixed deposit account, NRI account and salary account. I have chosen these basic types of bank accounts. So let's first talk about savings account. So savings account is one of the most basic account which most of the customers get opened in the bank. It basically helps consumers to save their money. If we have additional funds and we want to keep them secure and at the same time want to earn basic interest income on the amount which we have, then a saving account is considered to be one of the best financial instrument wherein a person can invest their money. Now, a saving account in India is really easy to open. One has to has a Aadhaar card and a PAN card with them, and that's that. These two documents are considered mandatory and you will be easily able to open your bank account in India. Now, if we talk about the limit of the money one can keep in the savings account, so as of now, there is no limit of the amount one can keep in the savings bank account. But then there are certain minimum balances which you might have to maintain in the bank accounts. But then again, it depends on bank to bank. Some banks would ask you to maintain, say, a minimum balance of, say, 500 rupees. Then there could be other banks which would ask you to maintain a minimum balance of nothing less than 25,000 rupees. So it depends upon the bank, their minimum requirement differs. Now, as I've already told you that the interest income is earned from the money which is kept in the bank. Now, the interest amount definitely varies from one bank to another bank. I have few examples with me. If I talk about State Bank of India, which is considered to be one of the largest public sector bank in India, in that case, up to INR 1 lakh rupees, you will be getting 2.70% as the rate of interest. Now, the rate of interest of these public sector banks vary a bit from those of the private sector banks. Let's talk about HDFC Bank. So, in HDFC Bank, if you are depositing, say, a sum of rupees 50 lakh and above, then the bank deposit, on the bank deposit, you will be getting 3% rate of interest. Now, as I've already told you, savings account is considered to be one of the most easiest way to earn the interest income or extra money on the idle funds you have with you. So one should definitely go and opt in for savings bank account. Let's move to the next. Next is the current account. So current account is considered to be the business accounts. Each and every business, it is mandatory for them to open a current account. Current account helps in transferring of the money from one account to another in a very easy way, quicker way, and at the same time there is no limit on how much of money can be transferred from one account to another. Now, it is best suited, as I've already told you, for corporations and business owners. Now, there is also no limit on how much money we would want to put in our current bank account, and then no transaction limits are there. But yes, the minimum balance which we have to maintain in the current accounts are comparatively higher than that of the savings account. But then there is this one drawback of the current account, then that there is no interest earned. But at the same time, there is this USP which the current account offers to us, that is known as overdraft facility. So basically, overdraft facility means consumers get to withdraw more money from the account than that is there actually in their account. Isn't it great? So these are few of the services which are offered by the current account. Let's move ahead. Now we'll be talking about recurring deposit accounts. So as the name clearly suggests, recurring means reoccurring, happening again and again. So let's understand what exactly recurring deposit account is. So those customers who are specifically interested in earning a higher rate of interest as compared to the savings account, then definitely recurring deposit account is the best option for you. Now, the minimum limit to open an RD account, recurring deposit account is actually known as RD account in short. So therefore, the minimum limit to open an RD account differ from banks to banks. So there are these banks who would permit you to submit 1,000 rupees on monthly basis to the other banks who would ask for more money in terms of the minimum limit. Now, as I've already told you, recurring deposit means reoccurring. So there is this fixed amount which is already set at the beginning of the tenure of the account. Say for example, you would want to deposit rupees 5,000 on monthly basis. So this amount has already been set by you and you have filled this information in the bank also. Now what will happen, a fixed amount, which in this case is 5,000 rupees, is deducted every month and recollected in your RD account, and this is how you are able to earn interest month on month basis. So RD is actually very flexible. Flexible as in the tenure is really flexible. You can actually keep your money anywhere from 6 months up to a period of 10 years. So higher the tenure, the more the amount, the more the interest you are able to earn. And one of the best features of an RD account is you can definitely discontinue your RD before the end of the tenure. If you feel like that you require the money, you need the money, but then the period of your RD is say 3 years and you would want the money within 2 years, then you can definitely discontinue your RD account and get the money back. Let's move ahead then. Next is fixed deposit. So I'm sure fixed deposit is one of the favorite investment avenue of India. Let's quickly understand what fixed deposit is. So these accounts are open to earn interest on the deposits. Definitely these deposits account provide better rate of interest as compared to those of the savings accounts. Yes, the interest is earned only after the maturity period. Now, it is considered to be one of the safest financial investments, safest financial instruments. Why? Because there is no risk of losing money. All you have to do is keep your extra funds, your idle money or your savings in one lump sum in the fixed account, and that's that. You will be able to earn a good rate of interest, good in comparison to that of the savings account. Now, there is no limit on how much money you can put in a fixed deposit account, but all the money has to be kept in the fixed deposit account in one go. You cannot do it again and again just like a recurring deposit account. All you have to do is decide a lump sum amount and then put it in the bank account in one go. Now, the higher the money allocation, the more interest is definitely paid to you. As I've already told you, FD account holds a lump sum amount as investment. So this has to be kept in mind. The higher the amount, the more the interest is paid to you. Now, this is also considered to be a win-win situation for both the parties because you are receiving a better rate of interest and the bank is receiving a good sum of money for a longer period of duration, which can be used by the bank in various ways. Now, the interest is paid once the tenure of the FD is complete. You will not be receiving interest before the maturity of the FD. In case you would want to break the FD in the middle before it actually completes its tenure. So in that case, what will happen? You might end up risking your interest income, or it might simply happen that you only receive your principal amount and would not be able to receive any interest income. So please make sure that once you start with your fixed deposits, then try that you would not withdraw the money before the maturity period. And most importantly, these FDs are risk-free investments with higher returns. And definitely because there is this fixed investment and the returns are the higher, that goes to say both of the bank and you are enjoying the fixed deposits. Now, let's move on to the other account which is known as NRI account. NRI stands for non-resident Indians. So these accounts are opened by people who do not reside in India, that is the non-resident Indians, but they want to or they wish to maintain a financial bank account in India also. So these people are the one who would open the NRI account. Now there are three types of NRI accounts which we will be talking about. One is known as NRO, that is non-residential ordinary account. The other account we'll be talking about is NRE, that is non-residential external account, and the third account is known as FCNR, that is foreign currency non-residential account. So let me quickly take you through all of these accounts. So first, NRO. So these accounts, NRO, that is non-residential ordinary account. So in these accounts, the money which is deposited, the denomination is in Indian rupees, and most importantly, the money is deposited from the earnings which have been made in India. That NRI has earned the money from Indian proceeds would be deposited in the NRO account. Now, there is no limit on how much money can be put in an NRO account. As of now, there is no limit decided. Now, again, any amount of balance can be maintained in the NRO account, and the principal and the interest earned on the principal both fall under the taxable category. Please remember this. And most importantly, these accounts are unaffected by any kind of rate of conversion because this account accepts the money in the rupee denomination. And an NRI can open a current account, a savings account, or a fixed deposit account through the help of NRO account. So next is non-residential external account, that is NRE. So these accounts also hold deposits in terms of Indian rupee denomination, but there is a difference between the NRO account and NRE account. The major difference between both of them is the money deposited here is not from the proceeds earned in India. That means the earnings or savings are from the home country of the NRI and not from India. Now again, there is no limit on how much money can be put in an NRE account, and the amount balance can be maintained as much as they want. There is this another difference between NRO and NRE account, that the principal and the interest earned on the principal do not fall under the taxable category. And lastly, these accounts definitely bear the impact of prospective change in the rate of conversion because the money or the proceeds which are deposited in this account comes from the home country of the NRI. Next is foreign currency non-residential account, that is FCNR. So these accounts also hold deposits in terms of money obviously, but then the basic difference is these accounts hold currency in the form of the approved currency. That means there is this list of approved currency by the Reserve Bank of India, and if you are an NRI and your currency falls under the list of the approved currency, then you can get the account deposited with the same currency as that of yours. If in case your currency does not fall under the list of the approved currency, in that case easy conversion of the earnings or the proceeds can be deposited in the terms of money which is approved. So all you have to take care of while depositing the money in the FCNR account, that is your currency approved by the Central Bank of India or not, and if it is not, then do not worry, the conversion of the earnings can be happening easily. Now, FCNR accounts are also known as FCNR B accounts. So that is very simple logic wherein B stands for bank. Now, again, there is no limit on how much money can be put in an FCNR account, and any amount of balance can be maintained. Now, the principal and the interest earned on the principal do not fall under the taxable category. And lastly, these accounts definitely bear the impact of the prospective change in the rate of conversion because the money deposited is in some other currency, not in that of the Indian currency. Therefore, it always bears the impact of the change in rate of conversion. Again, an NRI can open only a fixed deposit account, that too for a minimum period of 1 year under the FCNR account. Now, moving ahead to the last account, that is the salary account. So, salary accounts are generally opened by the corporates, big business houses for their employees. Nowadays, employees receives their salaries through these bank accounts only. Gone are those days wherein the employees would receive cash or checks in the form of salary. Now, each employee is definitely eligible to maintain a salary account in which company they are employed, and then the employer will credit the monthly salary of the employee in that particular account. Again, there is no limit on how much money can be put in this account because it entirely depends upon the employer how much salary he is giving to the employee. So, it is between the employer and the employee, therefore, there is no limit on how much money can be put in a salary account. Now, definitely independent transactions can be made by the employees. It is not like that it is a salary account, so only salary can be credited, but independent transactions can easily be maintained with the salary account also. One of the best feature of the salary account is these are zero balance accounts wherein employee can withdraw all the money without any problem, or the employee does not have to maintain any kind of minimum balance as such. But yes, the employees do not earn any interest on the salary accounts, and if there is inactivity in this account for say a period of 3 months or more than that, then the bank has the right to convert their salary account into savings account at any point in time. So yes, these were few of the types of bank accounts which we discussed today. Thank you.